This is Nightly Business Report with Sue Herrera and Bill Griffin.
The great rotation. The Dow closes back above 27,000 as investors take note of some major changes happening inside the market.
Medical milestone. The FDA gets ready to review the first treatment for peanut allergies.
Giving back. Wall Street remembers and honors the lives of those we lost 18 years ago today. Those stories and more tonight on Nightly Business Report for Wednesday, September 11th.
Good evening, everyone, and welcome. Well, don't look now, but the Dow is on a win streak. The blue chip index posted gains for 6 straight sessions, and it is now less than 1% from its all-time high. The grind higher today was quiet, but it was strong. Here are the closing numbers. The Dow Jones Industrial Average rose 227 points to 27,137. The Nasdaq was up 85, and the S&P 500 added 21. But there's a lot more to the market than the numbers suggest. A close look under the hood shows some big changes are taking place, and money is starting to flow into sectors that investors have been avoiding for a while. Bob Pisani is at the New York Stock Exchange.
There's been a lot of talk about a great rotation taking place, but what exactly are we rotating out of and into? There's a lot of confusion about different ways to slice and dice the market, so let's try to sort out some of the differences. First, cyclical versus defensive stocks. Since bond yields bottomed last week, economically sensitive groups like banks, transportation stocks, energy, retail, they've all outperformed. These are called cyclicals because they tend to do better when the economy, particularly global economy, is improving. They've lagged for most of the year on concerns that global growth is slowing. At the same time, defensive stocks, which have been strong most of the year, have begun underperforming. That means consumer staples, real estate, utilities, they're all down 1 to 2% over the past week. Then there's growth versus value. Growth is associated with companies that are growing earnings, understandably. That's typically technology stocks. Value stocks, typically considered cheap, and they've underperformed the market. Value right now includes banks, retailers, energy stocks, and those sectors have done better on this recent rally in the last week. There's another phrase, momentum stocks. They're stocks that have seen strong price increases. These stocks are usually strong when the market's going up, but they'll typically drop more when there's a sudden sell-off. This is what's happened in the last few days. Consumer names like Merck and Kimberly-Clark, they've been momentum names. They've been strong all year. They've been selling off. So why is there a reversal? Why is this rotation going on? Well, there's been optimism over trade talks fueling most of the rotation. Trade has been the primary driver of the stock market all year. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
And joining us to talk more about this market rotation, Ken Kamen is back with us. He's president of Mercadian Asset Management. Welcome back.
Thank you much.
You see this as a safety play by investors, right?
Well, I think that the value sector of the market is so underperformed over the last 5 years. The growth sector is almost twice the return cumulatively than the value sector has been, and it's been led by mostly the momentum stocks and the FANG and the tech stocks.
Right.
And a lot of people that are now worried that the market might be getting toppy are saying, okay, do I have to really ride the roller coaster down in those hot stocks when there's a lot of great bargains to be had in what we call value?
Yeah, which goes to the volatility. I mean, we certainly have seen extreme volatility at certain points in this market, much of it linked to headlines on trade. But you were saying that the value stocks, they're more predictable.
Well, the sawtooth of the pattern is a lot tighter in the non-go-go stocks, if you will. And I think that's the really important thing that the viewers have to really focus in on, which is that if you're saving for retirement and it's your nest egg, you really don't want to be riding the yay-boo of every tweet. And getting back to the fundamentals of owning companies with strong balance sheets and strong fundamentals, rather than some company that's got a great growth story and maybe trading at a ridiculous PE, feels a lot safer when the market seems to be bouncing along at the top. But I would like to throw in that what we're in the environment right now is that every time the market gets a new news, like Apple yesterday came out with the new iPhone and everyone was like a yawn. There was no big news there. And now a lot of these IPOs that were so highly anticipated, they've kind of been flat to down.
Right.
So it's that feel that maybe the growthy thing is changing.
So here we are, 27,000 on the Dow again, back to 3,000 for the S&P. We are very close to all-time highs. Are you getting nervous about this market?
Not really. I think that, the old phrase, don't fight the Fed. I mean, it really does look like they're going to cut at least a quota point. I don't think it's going to be more than that, and I don't think more than that is warranted. I think that it's okay for investors here, and I wouldn't be surprised if we get new highs. As a matter of fact, I believe between here and the end of the year, we will. That doesn't mean we won't get another surprise and a dip, but I think things are pretty favorable for equities.
Are there certain areas that you find more value stocks, certain sectors?
Well, I always like the idea of buying what's not been in favor. So to some extent, it's easy to almost say around the whole value chain right now, whether it's, some of the healthcare, whether it's some of the financials. I mean, I think it's important to kind of make sure you're broadening out your portfolio. I'd leave you with the idea that if you've been chasing momentum and riding on the fact that every morning you woke up and you felt good, but you didn't know why, now's the time to delve deeper into your portfolio to understand it, to own things that haven't been the go-go stocks.
There you are. Words of wisdom from Ken Kamen of Mercadian Asset Management. Always good to see you. Thanks again, Ken, for joining us. And later in the program tonight, we'll be turning the market rotation into opportunity, focusing on some value stocks. We'll get some names that you may want to consider investing in.
To the economy now, and the latest read on inflation. A measure of prices that businesses pay for goods and services unexpectedly rose in August. The producer price index gained 0.1% last month. The expectation was for no change. And a separate report showed that wholesale inventories increased slightly in July, suggesting that inventory investment could remain a drag on short-term economic growth.
In Washington, the Trump administration is readying a ban on flavored e-cigarettes. The Secretary of Health and Human Services said today that the FDA is going to outline a plan within the coming weeks, and the president agrees that something has to be done.
Vaping has become a very big business, as I understand it, like a giant business in a very short period of time. But we can't allow people to get sick, and we can't have our youth be so affected.
Shares of Altria, which owns 35% of vaping company Juul, initially lost ground after that announcement, did finish the session higher, though, today.
Oil prices fell today on a report that President Trump discussed easing sanctions on Iran. The idea was talked about as a way to secure a meeting with Iran's president later this month. The report comes one day after the exit of National Security Advisor John Bolton, who argued to push Iranian oil exports to zero. The price of domestic crude fell on the possibility that easing sanctions might lead to more oil on the market.
Speaking of oil, some sad news tonight out of the oil industry. Boone Pickens has died at the age of 91. He was a legend in the fields. But as Brian Sullivan reports, he also accomplished so much more.
I think the reason why I don't view myself as a workaholic is because I love to work.
In the media, he was known as
Boone Pickens, the corporate takeover raider from Amarillo, Texas.
To friends, he was just Boone. But to everyone, he was a master of reinvention, both personally and professionally. Born in Oklahoma in 1928, Thomas Boone Pickens was a businessman from the start.
When I was 12, I got my first job, newspaper job. I was a paper boy. I always had money after that in my pocket, and it was a good feeling.
He graduated from Oklahoma State University with a degree in geology and went to work for Phillips Petroleum. But the corporate life was not for him. Before long, he started his own company, Mesa Petroleum, with just $2,500. Pickens spent years out in the desert personally drilling for oil and buying up land, collecting valuable assets. He took Mesa public in 1964 and quickly realized what the power of stock can do. Turning from geology to corporate finance, Pickens became one of the first so-called corporate raiders. He unsuccessfully launched takeover bids for Gulf Oil, Phillips Petroleum, and Unocal, creating a playbook, though, that would be followed by many others over the next few decades. Take a small stake in a company, pressure it to sell itself, and become very rich in the process.
I would be foolish to sit here and tell you, that we lost in a deal where we made $500 million.
Despite his reputation as a stock-holding swashbuckler, Mr. Pickens was also an early advocate for shareholder rights, insisting that executives be compensated with stock.
Now remember, the stockholder owns the company, and the management's the employee.
That line of thinking informed a new generation of shareholder activists. In 1997, at the age of 68, Pickens started his investment firm, BP Capital, one of the first energy-focused hedge funds. It was a nearly total flop at first, but a huge bet on natural gas in the year 2000 proved prescient and set off a run to a billion-dollar fortune. In July 2008, he self-funded a $100 million campaign aimed at making America energy independent.
We haven't done a thing to lower our dependency on foreign oil.
Though the Pickens plan never reached the scale he wanted, Pickens has been instrumental in creating a line of natural gas-powered vehicles and a company called Clean Energy Fuels.
Pickens plan, booyah!
For Pickens, philanthropy became as important as profit. He donated $500 million to his alma mater, where the football team now plays in Boone Pickens Stadium. But his greatest love was the 65,000-acre ranch he owned in the Texas Panhandle. He even bought and moved his childhood home from Oklahoma onto the ranch and started to drill a new oil well there in 2018.
I always say I'll retire in a box. It's the way I'll go out, feet first.
A lasting memorial, perhaps, to a full life lived.
Oracle's co-CEO Mark Hurd is taking a leave of absence due to health-related reasons. Oracle's chairman Larry Ellison and co-CEO Safra Catz will cover Hurd's responsibilities during his leave. The company made the announcement when it released its earnings late today, a day earlier than expected. Oracle earned 63 cents a share, which was just about in line with estimates. Revenue of $9.2 billion was slightly below expectations. The stock fell in initial after-hours trading.
There are new developments tonight in the settlement negotiations with OxyContin maker Purdue Pharma. The Arizona Attorney General says that nearly half of all states and 2,000 local governments have reached a tentative settlement with the company over its role in the opioid epidemic. According to reports, Purdue is going to pay up to $12 billion, and the Sackler family that owns Purdue will give up control of the company. Now, this is essentially the same offer the Sackler family made recently to all parties involved in the litigation, but many state attorneys general remain opposed to this deal. A court trial is still set for next month in Ohio.
A New Jersey jury found Johnson & Johnson liable for $37 million in a trial related to its talc powder. In the trial, 4 people alleged that J&J's product caused cancer. Johnson & Johnson said it plans to appeal and that its talc products are safe.
And experimental therapy for peanut allergies took a small step forward today ahead of an FDA panel meeting later this week. The company behind the treatment is called Immune, and its shares soared on the news today. Meg Terrell has the story.
It's increasingly common and can be life-threatening. Peanut allergy affects an estimated 2.5% of U.S. children. Right now, there's no FDA-approved treatment to help, just extreme vigilance. But this week, a panel of advisors to the Food and Drug Administration will meet to discuss what could be the first FDA-approved therapy for peanut allergy. Made by drug company Immune Therapeutics, the treatment comes in the form of peanut protein, administered in an increasing dose over time that aims to help patients build up a tolerance. Today, the regulator released briefing documents ahead of that meeting. Baird analyst Brian Scorney says they showed the FDA validated the efficacy of the treatment.
Primarily, I think this is going to be about a discussion around the safety side of things.
Because the treatment is peanut protein, the side effects include allergic reaction.
Anyone who has a history of allergies, a child with very severe allergies, I think these are understandable side effects of the treatment, and I think ultimately are well worth the reward that you get for going through the treatment protocol.
Studies showed the treatment enabled 67% of patients to tolerate at least 2 peanuts after a year. That compares with just 4% who didn't get the treatment. All started by not being able to tolerate even 1/3 of a nut. The FDA panel will vote Friday on whether to recommend approval, and the regulator is scheduled to make its decision by the end of January. The next question will be its price and how many patients will use the treatment. Scorney says the cost may be around $10,000 a year. That would be more than the $3,000 to $5,000 he said can be charged for treatments now done by some doctors that aim to accomplish a similar thing, increasing tolerance to an allergen through exposure over time. But it's less costly than allergy shots. The main difference from what's already offered in the doctor's office, an FDA-approved standardized treatment.
This is a very standardized production methodology to ensure the consistency from lot to lot. You get the reasonable certainty that what you're getting is something that has been rigorously tested in clinical trials.
If successful, he estimates the drug could draw more than $1 billion in annual sales. For Nightly Business Report, I'm Meg Terrell.
Charles Schwab cuts 3% of its jobs. That's where we begin tonight's market focus. The brokerage firm said it will be shedding about 600 jobs as it looks to cut expenses in the face of falling interest rates. The stock was up nearly 2% to $42.76. Boeing CEO says his company is still aiming for the 737 MAX to return to the air by early fourth quarter. But he acknowledged regulators in other countries may not all agree on that timeline.
I think a phased ungrounding of the airplane amongst regulators around the world is a possibility. I know the FAA is working very hard to build that collaborative network amongst the regulators and bring everyone along together.
Shares rose more than 3.5% to $382.94. Starbucks clarified there will not be a SEC inquiry into that company's accounting practices. Earlier in the week, it was reported the coffee chain was under investigation by authorities, but Starbucks says it has exchanged letters with the SEC on how the company applied, quote, new revenue recognition accounting standards. The stock rose a fraction to $90.98.
After months of antitrust investigations, the FTC has now approved U.S. Foods' acquisition of 5 food businesses from the Services Group of America for nearly $2 billion. U.S. Foods, though, will have to sell 3 distribution centers for regulatory clearance. U.S. Food shares were up about 1% today to 41.09. General Electric is looking to raise up to $3 billion by selling part of its holdings in oilfield services company Baker Hughes. GE will end up with a minority stake in Baker Hughes. It plans to use the proceeds then to pay down debt. GE shares rose about 2.5% today to $9.36, while Baker Hughes shares fell more than 7% to $22.29.
A bit earlier in our program, we discussed the rotation that's happening in the market, and some areas like value stocks are starting to do a bit better. So the question is now the time to invest in that group? And if so, where should you put your money? Joining us is Mark Travis. He is president and portfolio manager at Intrepid Capital Funds, and he has some ideas for us. Welcome, Mark. Nice to see you again.
Glad to be here. Thank you for having me.
Your first stock pick is Hanes, and you make the point that we all need underwear, so it's a pretty reliable brand.
Well, I like to say that I like to invest in things that people need and use. Shoes, we'll talk about, underwear, electricity. I think that as far as the value choice, to me, if you look at the 9 Morningstar style box over the last 50 years, small cap value has been the best performing style on an absolute basis in that time period. And I've been in that space for the last 20. I'd say the last 5, it's been very difficult. I think what's been interesting is Michael Burry's comments, famous from the movie The Big Short, comment about small cap value last week and how there seems to be a sea change afoot where momentum shares have lost some sponsorship and money seems to be flowing into things like Hanes Brands, which has a brand that all the kids know, that we know from our youth, Champion Brands, grown very rapidly. It's gone from $1 billion in sales volume in 2017 to probably $1.8 billion this year. They're going to lose the Target business, but that's kind of built into the price.
All right.
They're growing at mid-single digits, got close to a 4% dividend, which in this world where the central bankers have their thumb on the scales of interest rates, that's a pretty high dividend rate from my perspective.
Okay.
And I think the shares are worth in the low to mid-20s from where they are today.
Quickly on these next 2, if we can, Mark, we got Vistra Energy. Hasn't been public very long, just a few years, but it's had a pretty good ride so far.
Well, I think, Bill, what's interesting about this, it's spun out of the old TXU bankruptcy, and they're an independent power producer. 67% of their costs are natural gas. Up until August, it had been pretty cool in Texas, believe it or not. But it's one of the few businesses you'll see that's buying back debt, increasing their dividend, and delevering. They're generating $2 billion in free cash flow on a $10 billion market cap.
All
so
right.
a huge free cash flow generator.
Yeah, I want to get to Skechers, which is your last pick. They have been growing quite rapidly.
I think the Greenberg family's done a great job. I'm a little leery of being in 2 share classes, but they've been good stewards of capital. They control the business through the B share class of Skechers. Worldwide growth has been pretty phenomenal. There's concerns of, the tariff interactions in production in China. They've relocated that to Vietnam, and they've done a good job in, getting athletes like Tony Romo and David Ortiz to kind of sponsor their product.
Interesting.
So, again, a good free cash flow generator, shares in the mid-30s. I think they're probably worth close to $50 a share.
Mark, thank you so much. Mark Travis
You're
with
welcome.
Intrepid Capital Funds.
Thank you for having me.
Elsewhere, California has now passed a landmark bill requiring contract workers to be labeled as employees. And while it may sound like nothing more than archaic labor law, it strikes at the heart of the business model of companies like Uber and Lyft and the so-called gig economy. Deirdre Bosa is in San Francisco for us tonight.
Everything could soon change for Uber and Lyft drivers.
Well, I think it will be great for those who are doing it full-time and supporting families.
The way it's set up is just fine.
Well, see, that wouldn't work for me because I'm doing Tesla. That's my main job, and I'm just doing this on the side.
I'm opposed to it in a lot of ways because I don't think it was, when they were writing it, they didn't really consider the actual independent contractors.
California's landmark bill could reshape the gig economy and require ride-sharing companies to treat drivers as employees with benefits and minimum wages versus freelance contractors.
What it does primarily is it makes it clear that there will be many more protections for drivers going forward in one shape, form, or another, and that will cost the companies.
For Uber and Lyft, it has the potential to cost hundreds of millions of dollars. For investors, a longer path to profitability when ride-sharing is already bleeding money. For riders, increased fares. There are, however, some questions over whether this bill will actually go into effect for Uber and Lyft. It's also uncertain whether drivers would even want to be classified as employees, which could take away their flexibility and ability to pursue other endeavors.
For me, it won't work. I wouldn't want to be employee because I'm just doing it for a few hours.
My thought is whatever we're doing right now is best for us.
I'm fine the way things are, but I can definitely empathize with, the people that are juggling real life stuff while doing this.
It wouldn't really change anything, honestly. They don't really care about us at the lowest rung of this, platform.
But one thing is certain, lawmakers are looking to reshape the gig economy, and California may just be the beginning. Nightly Business Report, Deirdre Bosa, San Francisco.
And late today, Uber issued a statement saying it will not comply with that new California law, arguing that drivers are not core to its business.
Coming up, Wall Street remembers and gives back. Anniversary ceremonies were held across the country commemorating the nearly 3,000 people who lost their lives 18 years ago today. The New York Stock Exchange and the NASDAQ observed moments of silence to honor the victims, survivors, and their families. President Trump and First Lady Melania led a moment of silence at the White House before participating in an observance at the Pentagon.
And nearly 2/3 of Cantor Fitzgerald's employees lost their lives that day, more than any other company with offices in the Twin Towers. Since then, Cantor has hosted an annual charity day to raise funds supporting causes around the globe. And once again, celebrities were on hand today to help the firm give back. Kate Rogers was there for us.
Cantor Fitzgerald has turned tragedy and loss into something positive. The firm, which lost more than 700 of its own on September 11th, donates every dollar made today, raising money for its own relief fund and 150 other charities.
It's so easy.
Celebrities and athletes manned the phones on the Cantor trading floor, making trades and closing deals, including actors Steve Buscemi and Rosie Perez. Others, including former President Bill Clinton and former UK Prime Minister Tony Blair, came to simply show their support.
And so we decided on this day, this most difficult day
we would turn it into something beautiful. So all these people behind you, see, they've all agreed to waive their day's pay today, and we ask all our clients to do as much business as possible, and we don't give away our profits. Every dollar of revenue, every dollar of business we give away.
Since 2002, Cantor's raised more than $150 million, including $12 million last year alone.
In your own private way, you might honor this day wherever you are, but to be able to be here up at Cantor Fitzgerald, who had such an incredible loss 18 years ago, but then to be giving back in such a great way, it makes it, I don't know, it just feels like a positive way to mark this day.
NFL star Victor Cruz was working the phones. He has his own foundation focusing on STEM education.
I'm here for Cantor Fitzgerald, obviously on behalf of my foundation, the Victor Cruz Foundation. Obviously, remembering September 11th and being here, remembering all of those, people that we lost on this day and doing things back for a good cause. That's why we're here. It's to give back. It's all about charity. It's all about giving back to organizations.
And to have some fun on the trading floor while helping out their causes of choice.
And I always try to sign up for this early slot so I can pump this place up, get it going.
Yeah, you have great energy.
That's what I'm saying. I feel like I'm part of the team. I got my trading jacket on, you know what I'm saying?
Helping a firm that lost so many honor their memory by doing good. For Nightly Business Report, I'm Kate Rogers in New York City.
Here's a look at the final numbers today. The Dow Jones Industrial Average rose 227. The Nasdaq was up 85. S&P 500 added 21. And that is Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening, everybody. We'll see you tomorrow.